Hello dear traders, let us review how the markets evolved in the last week. US stocks advanced on Monday, led by energy shares and healthcare stocks. S&P 500 rose 1.2%, closing at 2,104.05. It was the broad market index's first close above 2,100 since August 17. Stock market advanced despite economic reports indicated manufacturing sector in October grew at slowest pace in 2.5 years. The ICE US dollar index, a measure of the dollar strength against a basket of 6 currencies, ended up 0.17%. On Tuesday, Nikkei rose 1.3% as risk appetite returned with gains on Wall Street and the successful IPO of 3 Japan Post units. Exporters rose also with Honda Motor gaining 1.9% and Nissan Motor rallying 2.6%. Oil futures were sliding on profit-taking after solid gains on Tuesday. On Wednesday, the European stocks ended higher, supported by dovish comments of European Central Bank President Mario Draghi that policymakers were ready to expand the monetary stimulus program in December if needed. The euro weakened against the dollar, hitting 3-month low. The Stoxx Europe 600 index rose 0.5%. German factory orders for September came in lower than expected, showing 1% contraction year-on-year, not seasonally adjusted. On Thursday, oil prices were declining for the second trading day as markets were concerned about the global supply glut. Brent oil futures for December fell to $49.98 per barrel, while the white WTI oil futures for December reached $45.2 per barrel. Gold reached a 7-week low amid US dollar strengthening and continues to be largely dependent on US Fed hawkish comments. Copper slid to the lowest in 4 weeks, driven by the same factor. On Friday, the US dollar index reached the 7-month high as the US labor market statistics was better than expected. Once again, investors expect the interest rates to be increased in December. Oil extended losses after OPEC said it was not planning to cut its production volume, which intensified the oil supply glut worries. In Libya, the protests continue that have already led to 70,000 barrels a day cut in oil production. This week, we recommend paying attention to the following events: the Bank of New Zealand statement on Tuesday, the Fed chair and ECB president's comments on Thursday, and the German GDP on Friday. Markets will be less volatile with the reduced trade volume ahead of the central bank chair's comments. We recommend being careful with the shorts. Judging by the latest moves of the policymakers, the euro is expected to weaken against the US dollar. The ECB and Fed monetary policies look coordinated as the US rate hike and the expansion of EU monetary stimulus are expected all at the same time. This was all for the week. We wish you profitable trades and see you next week.